Next month 1 be just a silver price advance but a sustainable advance. Clive Maund says that silver's best month of the year is coming right up. The fundamental news is bullish, and the charts speak for themselves. He rests more by Clive Maund via Streetwise reports. For many weeks we have been waiting patiently, like vultures perched on the branches of trees, for the large specs to go belly up and croak, and the good news is that they just have. So it is time for us to swoop down and feast on the carcasses being silver, and the better silver stocks, which are at good prices here, and, although they have already started rallying over the past week or two, the cut structure is now much healthier, suggesting that they will continue to advance. On the 6-month silver chart we can see the breakdown from a symmetrical triangle that occurred late in November leading to a drop well into December, and also how silver has slowly recovered over the past 2 weeks. In itself this chart looks bearish, with a breakdown followed by a rally back up towards resistance, and moving averages in unfavorable alignment. And it is only when we consider the latest cuts, and then look at long-term charts, that we realize that the setup is a lot more bullish than it looks at first sight on this 6-month chart. Next we will look at 18-month silver chart, the main reason being so that we can compare the peaks and troughs on it directly to the 1-year cut chart placed below it. On this chart we can see that the silver price is within the confines of a large gently downsloping trading range bounded by approximately $15.25 on the downside and $18.50 on the upside. This chart makes clear why it turned up where it did a couple of weeks ago. It had arrived at a zone of support towards its July lows. The latest silver cut chart shows a remarkable improvement in the cut structure in the space of just 4 weeks. Remarkable because the drop in the silver price that triggered it was not all that great. What this cut chart shows us is that this latest drop in the silver price was the last straw for the large specs who have thrown in the towel, with the huge profits made by Bitcoin speculators in recent weeks making them feel like ripe lemons. If you had to give a job description for the large specs in silver, the most accurate one would be bag holders, since collectively they are always wrong, and you certainly don't want to see them with a big long position if you are contemplating buying. Right now they are nowhere to be seen. They have fled, which means that the coast is clear for smart money buyers. There have been some doubts expressed with respect to silver in the recent past along the lines that either it will drop to new lows or double dip to its lows of approximately 2 weeks ago. But the latest cut suggests that a drop to new lows is probably out of the question, and further that while we cannot rule out a drop towards the lows of 2 weeks ago, it looks unlikely, and should it do so, aggressive buying will be in order. Here we should note that a favorable cut setup generally leads to a rally, but does not, by itself, mean that a new bull market is set to start, although it is normally a precondition for a new bull market. The latest hedgers chart, a form of cut chart, also looks good for silver, and, because this chart goes back much further than the cut chart, it enables us to see what happened to the silver price following peaks on this chart going back years. Chart courtesy of SentimentTrader.com. The long-term 10-year chart calls to mind the excellent film Groundhog Day, where a guy keeps living the same day over and over, because we just keep trotting out the same description for the long-term silver chart, which does save work. Here it is again, with some adjustment. Like gold, silver is marking out a giant head and shoulders bottom pattern, but in silver's case it is downsloping, as we can see on its 10-year chart below, which reflects the fact that silver tends to underperform gold at the end of sector bear markets and during the early stages of sector bull markets. Prolonged underperformance by silver is therefore a sign of a bottom. This chart really does show how unloved silver is right now, and while we have seen some deterioration in its volume indicators in recent weeks, more important is the big improvement in the cut structure detailed above. A break above the neckline of the pattern, the black line, will be a positive development, and more so a break above the band of resistance approaching the 2016 highs. Once it gets above this, it will have to contend with a quite strong zone of resistance roughly between $26 and $28. Finally, we see that silver's best month of the year is coming right up. The conclusion is that silver is now a strong buy, and an even stronger buy, in the event that it should react back short-term towards its lows of about 2 weeks ago. While we can speculate about why the silver price should rise soon, with reasons such as a falling dollar, and funds flowing out of the cryptos, as a result of the Bitcoin bust, an attack on Iran, etc., it is not really necessary, as the charts speak for themselves. Gold, silver and the mining stocks are headed into the stratosphere in 2018. There is something big brewing in the gold, silver, and mining share markets as we head into 2018. December 26, King World News. The gold mining stocks are finally looking to assert themselves and lead the metals higher. This will launch the bull market in mining stocks. Below is a 5-year chart of the Hui Gold Mining Index. The Hui is set for a monthly close in December, above the 50-month moving average. If that December monthly close above the 50-month moving average takes place, watch for January, February, and March closes above the 50-month moving average, which would mark the first time the Hui has had 4 consecutive closes above the 50-month moving average in more than 5 years. See chart below. Hui breaking back above key 50-month moving average, gold hinting massive Hui breakout is coming. Below you can see that the gold ETF, GLD, has already had 5, about to be 6, consecutive closes above the 50-month moving average. See chart below. Gold has broken out and is ready to advance. The big gold breakout is coming. The big gold breakout will take place when the price of gold breaks solidly above the 30 quarterly moving average. A surge in the price of gold, above $1,400, will also move the quarterly MACD into a buy signal for the first time in 5 years. See chart below. Quarterly MACD close to issuing a major gold buy signal. The bottom line here is that as pessimism in gold, silver, and the mining shares crescendoed at the end of 2017, it was met with large volumes of smart money buying out of the East for physical gold and silver, and, on the mining share side, by insiders of high-quality mining and exploration companies. Remember, the cash flows of the high-quality mining companies are already at an all-time high. See chart below. Yes, free cash flows for mining companies are at all-time highs, breaking the record set in 2011. And yet the Hui is roughly 70% lower than it was in 2011. That is how irrational things have become in the gold and silver sector, but it will not be a state of permanence. The purpose of the psychological warfare conducted in the paper markets is to keep people away from gold and silver, and also to get them to sell. Bottom line, patience. The bottom line is the long-term bullish trend is very powerful for the price of gold as well as the high-quality mining shares, despite the fact that games will be played in the paper gold market so that the commercials can cover short positions. For all of the gold and silver bulls, the wind is now at your back, and it will continue to be that way for many, many years to come as the prices of gold and silver make their way to new all-time highs. All that is required at this point is patience. 2018 is setting up to be a very big year for the gold and silver bulls. being so that we can compare the peaks and troughs on it directly to the 1-year COT chart placed below it. On this chart we can see that the silver price is within the confines of a large gently downsloping trading range bounded by approximately $15.25 on the downside and $18.50 on the upside. This chart makes clear why it turned up where it did a couple of weeks ago. It had arrived at a zone of support towards its July lows. The latest silver COT chart shows a remarkable improvement in the COT structure in the space of just 4 weeks. Remarkable because the drop in the silver price that triggered it was not all that great. What this COT chart shows us is that this latest drop in the silver price was the last straw for the large specs who have thrown in the towel, with the huge profits made by Bitcoin speculators in recent weeks making them feel like ripe lemons. If you had to give a job description for the large specs in silver, the most accurate one would be bag holders, since collectively they are always wrong, and you certainly don't want to see them with a big long position if you are contemplating buying. Right now they are nowhere to be seen. They have fled, which means that the coast is clear for smart money buyers. There have been some doubts expressed with respect to silver in the recent past along the lines that either it will drop to new lows or double dip to its lows of approximately 2 weeks ago. But the latest COT suggests that a drop to new lows is probably out of the question, and further that while we cannot rule out a drop towards the lows of 2 weeks ago, it looks unlikely, and should it do so, aggressive buying will be in order. Silver and the better silver stocks, which are at good prices here, and although they have already started rallying over the past week or two, the COT structure is now much healthier, suggesting that they will continue to advance. On the 6-month silver chart we can see the breakdown from a symmetrical triangle that occurred late in November leading to a drop well into December, and also how silver has slowly recovered over the past 2 weeks. In itself this chart looks bearish, with a breakdown followed by a rally back up towards resistance, and moving averages in unfavorable alignment. And it is only when we consider the latest COTs, and then look at long-term charts, that we realize that the setup is a lot more bullish than it looks at first sight on this 6-month chart. Next we will look at 18-month silver chart. The main reason next month won't be just a silver price advance but a sustainable advance. Clive Maund says that silver's best month of the year is coming right up. The fundamental news is bullish, and the charts speak for themselves. He rests more by Clive Maund via Streetwise reports. For many weeks we have been waiting patiently, like vultures perched on the branches of trees, for the large specs to go belly up and croak, and the good news is that they just have. So it is time for us to swoop down and feast on the carcasses being here. We should know that a favorable COT setup generally leads to a rally, but does not, by itself, mean that a new bull market is set to start, although it is normally a precondition for a new bull market. The latest hedgers chart, a form of COT chart, also looks good for silver, and because this chart goes back much further than the COT chart, it enables us to see what happened to the silver price following peaks on this chart going back years. Chart courtesy of SentimentTrader.com. The long-term 10-year chart calls to mind the excellent film Groundhog Day, where a guy keeps living the same day over and over, because we just keep trotting out the same description for the long-term silver chart, which does save work. Here it is again, with some adjustment. Like gold, silver is marking out a giant head and shoulders bottom pattern.